Hey, my name is Jason Nicholson and welcome to my YouTube channel. In this video, I want to talk about a new lender that's got 100% mortgage. Now, we haven't gone back in time. It's not 2008 all over again, but it is familiar, isn't it? That was a very common thing back in 2008. We have had a lender in the last couple of years that did have 100% mortgage, but this is really prominent. It's getting a lot of publicity at the moment. And I want to give you the pros and cons of 100% mortgage, because let's face it, this could benefit some people that don't have the bank of mum and dad, otherwise would struggle to get onto the property ladder, but they can afford to pay their rent each and every month. So if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 42,000 subscribers. We give you mortgage content, house price content, property investing content every single day. And let's get some more views on this video. Smash like, tickle like, do something to that like button, and then share this video. I bet you know someone that wants to buy a property but doesn't quite have the deposit that could benefit from this. So if you click that little share button, you can email it, WhatsApp it, or Facebook it to them and let them know how this all works. So we've actually talked about this exact lender probably a week ago. And this is a lender called April Mortgages. So they're called April Mortgages, and we talked about them a couple of weeks ago because they have another new product. They're really trying to get themselves known in the market. They're not very old, about a couple of years old, I believe. And they had a product a week or so ago that was 7 times your salary. 7 times your salary. So if you want to see about that one, if you click where it says Property Accelerator, click on videos, and you can look for the video that talks about 7 times salary, and we talk about April Mortgages there. So that's one product they've got. They're clearly looking to disrupt the mortgage industry here. So in this scenario, they want to lend people 100% of the value of the property. Now, this is a benefit to people that just don't have a deposit. Some people, it's really hard to save up for a deposit, but maybe you've graduated, you've got a good job now, or you've had a promotion at work, and you could afford the monthly payments of a mortgage, and you feel that your rental payments each and every month are a waste of money, and you're just going to struggle to get that deposit. This gives you an opportunity and an idea. So how much will they lend you first and foremost? I think that's important to know. It's an odd number here. They will lend you 4.49 times. I don't know why it's not 4.5 times. 4.49 times your annual salary. So that means that if you are on £40,000 a year, or you and your partner are, that you want to buy a property with, because you can do this as a joint application, that means that you could buy a property for £179,000, 600. Right? Now that gives you some options. You're not going to buy much in London with that. Of course you're not. But you could buy in a lot of the country. You could buy in Wales, you could buy in Scotland, you could buy in the north of England, you could buy in the east and the west. Maybe not so much in the southeast. You might find a little pocket where you can. Hastings, you could buy a property in Hastings, not quite Brighton, but it's not far. And so it could get you started on the property ladder. So that's a good option. Up north, you could buy a house with that. Now, they do have some things that are important to understand as well. So they want you to have a minimum salary of £24,000. Obviously, you're going to have to pass affordability checks. So if you've got, just because you earn 24 grand or you've got 40, if you've got lots of credit card debts, lots of Klarna, lots of car finance, you're not going to be able to borrow. You need to be able to pass affordability checks like you would with any type of mortgage. Now, what are the rates on this one? They're not cheap, I'll give you that. So the rate on this one is 5.99%. And that is understandable because they're taking the risk here. You have 100% borrowing. If the market drops 5% and you can't keep up your payments, they're going to lose money, aren't they? Repossessing that property, reselling it for an auction, they'll probably get a 20% discount on the property. So they could lose a ton of money here. So there is a risk, and that's why the rates determine that. And that's an important consideration here. Now, they want to make sure that you are with them for a while as well on this mortgage. And the term is quite long. So the term on this is between 10 to 15 years. A fixed rate for 10 to 15 years. Now, if you're in the camp where you think interest rates are going to go through the roof, then fine, fix at the 599, and that's a good option. What I would do is wait for rates to come down a little bit more. So as rates come down, the 5.99 might go to 4.99, while everyone else's rates are at 3.5. So they will move down as the market goes down. I think at 5.99 for 10 years, that's a big ask here. But would I consider this if I was in a rental property, I was struggling to save for a deposit? I would. I would consider this type of product because it gets you started on that property ladder. It's not for everyone, but the fact is that if it stopped me paying rent, got me to start building some equity in a property, then I would consider that. Now, the 10 years, you could get out of that, but you're going to pay a stiff penalty on that. They're going to have penalty charges in there that are going to be locked in for quite a while. So that is something you've got to go in fully understanding. You need to speak to a broker, look at your scenario. Let's give you an example compared to Nationwide, for example. So this is probably going to be a first-time buyer that buys this type of deal. And with Nationwide Building Society, they have a deal which is 4.79%, so nearly 1% cheaper. Now, you've got to have a 5% deposit on that. So 200 grand place, you've got to have 10 grand as a deposit. So that's something you've got to consider there. But you'd only be fixed for 5 years in that scenario. And so that, if I had the option, if I had the deposit, I would go with the 5% deposit. But I'm totally being frank and honest with you. When I started out in property, it was hard, and I had to really struggle to get a deposit for my first studio flat in Dorking down the road. And I would have considered taking a deal like this just to get out of the private rental sector and have something that's my own property that's increasing in value, and also my monthly payments are reducing that balance over time as well. Let me know, would you consider 100% mortgage? Let me know in the comments below. Make sure you smash like, do share this video. I'm sure you know someone that wants to buy a property that could really benefit from knowing what options they've got at least. And do check out all the other content as well on the channel, including this video right here.